Welcome back to the Sunday Report. We're gearing up for July. There's a lot to talk about. Last week was boring, but I think there's excitement coming up. Even though there's been lots of headlines that some states can't get any fireworks at all and they're just going to do pyrotechnic shows, there's still got to be a lot of fireworks in this market. So let's get into it. So last week we were talking about a melt up in this market, and we saw just that as this S&P ended up extending way over what everyone was expecting. And we'll share some data here in the Discord. If we go over here to the charts and data that we shared for contenders, we could see on the 1 minute we're at a 80 RSI on the S&P, 5 minute, 81 on the 30 minute, 81 as well. This market is way overbought and is ripe for a correction. Now, will this continue to extend? Well, we're thinking right now that we could probably push to 392 or 393 at the peak, but then I expect this market to correct back to the downside. And if we look at the TTM squeeze right here, we can see that it looks like it's starting to turn as well. So let's go ahead and take a moment and look at this bullish argument for why this market is rallying. And I see some people think that the lows are in and that this will continue to go up. Obviously, due to the technicals, there's nothing showing that. But there's also a lot of indicators showing that we're in a recession. And some people believe that the Fed will take this information and switch up their policy to more dovish to support the markets. However, inflation is still rampant. And if we look at some of the data that was shared by the Federal Reserve, let's see, by the Cleveland Fed, inflation is expected to be up another 1%. And actually here, I'll show some of this stuff that I posted for contenders, mostly driven by gas prices. If that pans out, we're likely to see another 50 to 75 base increase to rate hikes. Listen, the Fed does not care about causing a recession because they're trying to cause a recession because they want to bring prices down. They want to crush this economy. Remember, the market is forward looking. Okay, so the damage that's done to the market is going to be just now hitting the economy. And if inflation continues to ramp up, the Fed is going to continue to be aggressive and continue to tighten down on a already receding market. All right, the recession is here, but all indicators show it. We're no longer in a conversation where people who are bearish have to argue for why they're bearish. This is now on people who are bullish. It's now their job to explain why you should be bullish. And honestly, when I look around, I can't find any solid arguments to defend a bullish position right now. And as far as this conversation around energy goes, you might have seen it in some of my shorts on YouTube or some of my content on TikTok. The Biden administration is doing anything they can to blame anyone but themselves for everything that's going on with the energy crisis. And I get it. There are some external factors that are causing, this to really bubble up into a bigger and bigger issue. But we're not doing anything to really fix it. Biden even coming out and blaming gas station owners. It's ridiculous. They set their prices based on the price of crude oil. Then they have to adjust for taxes. Then they have to adjust for their operating costs and the transportation to move it around. At the end of the day, they only increase it by 30 cents tops. And even then, only 10 cents of that is actual profits. They make more off of selling you goods out of the store than they do the gasoline. So to blame these individual owners who are not part of franchises, these are just individuals, it's just so ridiculous. And they just don't really want to point the finger on themselves for all the weird ESG guidelines they've set, for closing down pipelines, for having wonky permits where they could shut you down at any time. No one's going to invest in this. No one's going to use this. And the oil companies are fine with just coasting as they have been. All right, they're still making solid money, and a lot of that money is actually coming from the external countries outside of the U.S. that are willing to pay more than people in the U.S. for the oil, because they're still exporting a lot of these products out, and they're saying, look, you're not going to pay this price, you're putting all these limitations on us, we're just going to export this out and make more money because it's still a free market and we can do that. And so it's up to a government to actually make policies and changes that can help fix this issue, and they just aren't doing it. And remember, this is our big bullish case for energy, why we need uranium to fix a lot of these issues, and why oil will be consistently bullish. And if we look at some of the content that's posted in the Discord by Value Homie, one of our members, we appreciate having him. While energy stocks were net sold from Friday to Wednesday, the sector started the largest one-day net buying since early April on Thursday. That was on the 23rd, okay? Hedge funds were heavily shorting these stocks before then, but now they're buying up. And if we look at the charts and data here, we can see how low the RSI was on XLE. If you've been following the content in the Discord, we are saying that we were looking for maybe 68 as a good buying indicator. And if you've been following my trades, I actually, and also the portfolio video that I put out last week, you'll know that I actually bought in around that time period as well, a little bit before they did, probably a little bit early because I took some bleeding. It was a rough takeoff, but I still think it was a great position to take, and I expect that to pay off soon. If we look at UNG, which is natural gas, this is the 1 hour graph. We can see that we're also really low on the RSI here. On the 1 day, seeing the same thing down to a 31 RSI. We can see how overbought this sector can get. Just like the S&P got really overbought, all these moves on these stocks are getting really over exaggerated. So I expect those bullish moves to be the same way and for decent profits to be made here. And I think this is a good moment to say, hey, subscribe to the channel, like the video. If you're enjoying this content, if you found this content helpful, please like the video, maybe leave a comment, share it with your friends or on Twitter or something. It really helps out a lot. I know lots of people always give me shout outs on content. I appreciate that, but sharing this or leaving a like on the video does so much to help the algorithms so that we continue to do well. I do also want to add, if you like the content, you want to see more of this content here in the contender section, this channel is now viewable to everyone. Only subscribers will be allowed to post, but simply by joining the Discord, you can view all of this content just for free. Now let's hop on over to the economic calendar. We can see Wednesday is going to be a big day this week, all right? We have our GDP growth rate, which is, as consensus and forecast, being in the negatives. All right, this is one of those things where we've seen tons of indicators that we're headed into a recession. Negative GDP growth for 2 quarters in a row is your official recession indicator. Lots of people are still arguing for a bullish case. Where is it? I don't see it. Also, we have Chair Powell talking at 8 a.m. So right before the market opens, we'll be getting a reaction to whatever he has to say. Last week, we saw him getting drilled and the market was completely ignoring it and continuing just to become more and more overbought, which is just building up this consensus that I think this market is going to correct. Thursday, we have personal income and personal spending. This will be also really important to look at as well. So 2 big things I want to cover at the end of this video is I think a great play right now is to go ahead and short the indexes. There's a conversation in the Discord about which index. Personally, I want to play the S&P, but you can read that content on there, develop your own opinion. I definitely advocate for you to do that. Always do your own research. And I think dragging those out to July would be a great move because I think that a lot of people think that the Fed is going to pivot and they're going to be more dovish heading because of the incoming recession. But you know, you could be 40 or 50 years old, and this is important to think about. You could be 40 or 50 years old and never have seen a recession with high inflation. All right, this is a lot like the 70s. But the other thing I want to mention that's really important is that if this market gets surprised, it is overall in an environment that I think it's in, where people think the Fed's going to pivot and they don't. If we see this market get crushed, it could hit everything, and there could be no real place to hide. Lots of people are still advocating to hold cash right now because, you know, cash is still an asset. And I think it's kind of hard to argue with that. The big risk with these energy trades is that this whole market gets crushed as the Fed continues to raise interest rates. If that occurs, a lot of people could be suffering a lot of pain, even in the energy sector, even though we're still bullish there. Now, I think that will be the first sector to always bounce back. And I think at some point of being crushed, technology will be where everyone rushes to. And again, I do want to also mention biotech is still being really sturdy in this environment, surprisingly sturdy in this environment. And so that's another sector I'll always continue to look at, especially on these dips. So I think that's all going to be important to consider. All right. The risk there is that this whole market gets crushed. And when people start panicking, we actually see capitulation in stocks rather than bonds. People might panic out of everything and want cash. And remember, if this market does have a crash, you're going to be out of those positions right away. You might not have the liquidity to exit out of your positions on the way down, and you might just be stuck bag holding terrible positions. So keep that in mind as well. I hope you enjoyed this episode of the Sunday Report. Remember, the conversation is always continuing in the Discord. And once again, please subscribe, hit that bell for the alerts so that you can keep up with the content. And I hope you enjoyed this episode.